Hello, everyone. Welcome. Thank you all for being here and for taking the time to be with us today. We'll give everyone a few moments to trickle in, but thank you for being here with us, and welcome to Hello Alice, where we're calling 2022 the year of small business. So thanks for being here with us to learn, to connect, and to show your support for our community of small business owners and support of them thriving this year and beyond. So I'll kick things off by introducing myself, and in just a moment, you'll hear from our panelists. So my name is Danielle Teleria. I'm in Miami, Florida, and I have the pleasure of working on Hello Alice's marketing team. And through that role in support of more than 600 small business owners in our community, I get to connect daily with these small business owners. So I get to hear their stories, I get to learn about their impact, and I can assure you that our nation's small business owners are optimistic, they are resilient, and they are making incredible impact. And along with learning about their impact and all of their big ideas over here at Hello Alice, we also learn daily about their critical needs, including access to capital. So today's topic of conversation is Cash is King and Queen, the state of capital access for small businesses in America. And in this conversation, which will be led by our fearless co-founder, Elizabeth Gore, alongside two incredible financial leaders from Mastercard and Silicon Valley Bank, we'll be diving into data and discuss why access to capital is the largest issue new majority small business owners are facing today. And more specifically, we're going to be talking about what corporations can be doing to create positive change for these entrepreneurs. So before I pass along the virtual mic to Elizabeth to talk to us about Hello Alice and introduce our panelists, I just want to point out that we encourage you to use the chat. Feel free to send messages in the chat. If you have, any comments about today's conversation, you can definitely include that in the chat. Just make sure you will see that blue drop down and click on hosts and panelists. You might see it say host and panelists or everyone. Make sure it's clicked on everyone so that we can all see your comments in the chat. And if you have a question, we encourage you to please ask that, and do so by using the Q&A bubble. So down below, you will see that Q&A bubble. You can click on it, it will pop out, and you can ask any question there, and we will pass it along to the panelists to answer for you later on in the conversation. And on that note, I'll pass things off to Elizabeth.
Great. Well, it's great honor to be with all of y'all today. Howdy from Hello Alice. I'm Elizabeth Gore, one of the co-founders here. And I'm thrilled to be with Ashraf and Ginger, Silicon Valley Bank and Mastercard. I've been partners of Hello Alice since our inception. So we have a huge amount of trust and excitement because of the impact we've collectively made with these organizations, with small business owners over the year. So today, cash is our topic. I was laughing earlier that even though cash flow is needed right now, it's always needed with small business owners. It's needed during times of growth like 2019, and it was needed in times of difficult tragedy like 21-22. So where are we right now? Entrepreneurs, this is a really funny time with entrepreneurs and small business owners. We still have a huge amount of small business owners and entrepreneurs looking for cash for what I would call survival. They're not quite over the hump yet. They're not quite in the growth mechanism. They're trying to get on track, trying to gain back those receipts. Then if you jump all the way to the other side of the pendulum, we have more businesses being registered brand new right now than we have in the last 3 years combined. So we have this really funky time where we've got still survival and then we have brand new. What we haven't seen yet is this crawling towards growth, which we hope we will all get back to. And in a minute, I'm going to ask Ashraf what they're seeing from a venture perspective. We surveyed before this a huge amount of small business owners, 600,000. In fact, over 50% of them are going after some kind of financing in the last 12 months. That is massively high. And then 2/3 of those saying even $25,000 would make a difference in their business right now. 41% say that their applications were actually not approved, which is really interesting. And then if you cut that by gender and ethnicity, you have, for example, Black business owners over-indexed on the portion of which none of their applications was approved. And then 49% said they were not approved compared to 28% of white owners. So if you look at ethnicity, industry, geography, it also has everything to do with this. At Hello Alice, our goal is to be the #1 place for small business owners to access capital, leaning in on grants, leaning in on loans, credit. So this is a really important topic to us. So I wanted to hand it over to Ginger to introduce herself.
Great. Thanks, Elizabeth. And it's just wonderful to be with you, and just absolutely love what Hello Alice continues to do. I'm Ginger Siegel, and I have the pleasure of leading Mastercard's small business organization for North America. I've been serving small businesses my entire career. I guess you would call me a small business zealot. That's the only way I can describe it. But have spent a lot of time in the financial world, financial institutions, as well as consulting. So I've spent a lot of my time looking at small businesses from their needs perspective. So look forward to today's conversation. And I will turn it over to my esteemed colleague, Ashraf.
Thank you, Ginger. And thank you, Elizabeth. And good to be with all of you. My name is Ashraf Hebela. I'm head of startup banking for Silicon Valley Bank. I've been at Silicon Valley Bank for 13 years and had a multitude of different roles, from head of product management to head of analytics to the chief of staff to the CEO, and now running our startup bank. Before that, I actually, for those that don't know, Silicon Valley Bank is a full suite bank focused on the technology and life science space. And so we bank the innovators in the United States and as well as internationally, as well as their investors. And before that, I spent about a decade as an entrepreneur myself, working in a bunch of different startups in Silicon Valley. First gen American and an Egyptian American. So pleasure to be with all of you.
Thank you. It's very exciting. And I just have to give Mastercard and Silicon Valley Bank a huge shout out for putting their time, energy, money, thought, and advocacy into diverse small business owners during COVID-19, after George Floyd's murder, during our AAPI violence. They reached out to us and said, how can we help? What can we do? They both collectively put in grants for small business owners, put forward advocacy and political will, technical help. So I just had to say, when the rubber meets the road, y'all are there. So thank you. I'd like to get into just trends we're seeing. I opened up with data. We pull together these small corporate groups just to share ideas, almost as if we were used to have coffee or drinks, I was saying. So Ashraf, I'm going to point to you and I'm just curious what you're seeing trend-wise. Are there term sheets floating around? Are there not? Are people bullish? What's the investment thesis like right now?
Yeah, sure. I'll talk specifically on the sort of U.S. venture backed industry, just because that's the domain we're in. It's a little bit of a tale of two cities, although I wouldn't call anything, a significant, significant issue. So you're seeing in Q1 of this year, definitely a softening in the late stage, and frankly, a closure of the public markets, the IPOs. So IPOs are sort of, frankly, kind of shut down in Q1, all things considered in tech and life science. Very few and far between on activity there, whereas I think in 2021, the world looked a little different. A lot of that's driven obviously by the macroeconomic uncertainty. That's then having a little bit of an impact on late stage. And so late stage valuations are starting to get tested. You're also seeing it on the fundraising side with investors. So, funds aren't closing quite as fast. But what you're not seeing is this binary yes or no, right? These funds are still raising. It's just taking a little longer to raise. The valuations you might not get, but you're getting the funding you need to actually get to where you need to go from a goals perspective. So not a complete shutdown in the late stage. And then what you're seeing in the early stage actually is still a vibrant activity. So we don't suspect that deal count, total deal count's going to come down too much year over year, but we do suspect that invested capital might come down. But in perspective, last year was the best year venture capital ever had in terms of venture capital dollars raised. So to come in silver medal relative to the historical trends is not so bad. So I'd say put on that optimistic point and just know that you can't have the best year every year. But right now, based on Q1, 2022 is looking like it's going to be silver or bronze medal relative to historical. Just to put it in context, we're talking about almost a $250, $280 billion year of invested capital potentially this year. And that's in a backdrop of a historical 80 billion. So just to kind of put it in perspective. So for the entrepreneurs that are in tech and life science, you might get a little bit of the, well, this isn't 2022, but have perspective to know that it is still very vibrant. And I think a lot of that, Elizabeth, is and Ginger, is based on the foundation that I think most companies, most industries and most sectors know that technology is here to stay. And what you're really seeing is you're starting to see the investors, interestingly enough, say, maybe late stage, I missed that cycle. Maybe I'm not going to make the money I need on the valuation on the late stage. So I'm actually not going to recycle out of alternative investments, out of venture, but I'm just going to come in early and I'm going to meet for the next cycle to grow. And I'd rather come into the early stage. So for a lot of the entrepreneurs starting ideas, this is actually a good time to get the attention of some seasoned investors that are starting to move into the early stage.
Super interesting. As a Series B backed company, that all is very important for us to learn and hear. Ginger, let me turn it to you on general banking and credit. I'm just curious what you're seeing and hearing. I think we could all learn a lot.
Yeah, no, and I just want to kind of double click on what Ashraf said, is that a recent study that we did, and Elizabeth, you know I love stats, but over 75% of small businesses are actually positive and feeling like they want to be in the growth mode. And I think that's really important because, you know, we get mired into talking about COVID, and the way we're looking at it is, how do we get small businesses kind of over this hump and back into thriving? The other thing, and you brought this up when you were talking, is there's actually been about an 84% increase in new business formation, which is extremely positive, but it also drives the need for capital. And you know, when we think about capital, it's not just about the capital that they're going to use to buy supplies, but for example, we're seeing an enormous need to break down that digital divide. We know that particularly with Black-owned businesses, they've historically been left behind because of their limited access to capital and bank loans. However, they've also been left behind because of the digital divide. And during COVID, there was a 200% increase in e-commerce.
Wow.
And here's another really scary stat, Elizabeth. When COVID hit, of the 30 million small businesses, 9 to 10 million did not really have a digital online presence. And Hello Alice knows better than anyone the importance of integrating and having a digitization of the work that you do. So when you think about the need for capital, it's not just capital to buy everyday supplies to actually make what you make or sell what you sell, but it's how do you operationalize your business? And we see this particularly with this gap with underserved businesses. And that's just a really important place to start here.
Well, let's keep on that thematic. You know, we look at underserved businesses as capitalists as the biggest opportunity in this country. You know, I think y'all know we use the term new majority instead of minority. If you look at women, people of color, our US veterans, the LGBTQ plus community, they are all these brand new businesses that are opening are the vast majority of those business owners. So I want to know, we're going to continue with this cash is queen, cash is king thought process. What are y'all doing in your companies and or seeing to ensure that we're getting more cash in the hands of diverse entrepreneurs? And, you know, Ashraf, I know you come from a venture perspective or more high growth loans. Ginger, you're looking at credit. but also you have some interesting advice around receivables. So why don't we kick off, Ginger, with you? And I'd love to just hear what you all at Mastercard are doing to get more cash in the hands of these owners.
Yeah, I mean, I'm really proud to be able to say that, you know, Mastercard's doing a lot. We as a company, and Elizabeth, I think that's why Hello Alice and Mastercard work so well together, because we share these same values. But we feel that there's a strong obligation as a corporate citizen to make sure that the digital economy and access to capital works for all. So we are investing $500 million in Black communities through 2025. And we're doing this in a couple different ways, where we are actually starting in 7 markets, our in solidarity cities, and we're focused on them to really do a couple things. Number one is to launch some of these affordable financial tools and services so they can digitize and they can grow their customer base. We're also developing, you know, separate even from small businesses, we're developing Money Connect solutions so that people can actually send money to relatives and get money from relatives. We can enable real-time payments because, as I mentioned, it's not just about borrowing, but we have to help these small businesses really get their own money in quicker. And then we also are looking at expanding access to capital through some of the relationships we have with, you know, as you know, Elizabeth, community development, financial institutions, and really focus on those institutions in order to increase capital that's available in some of these minority communities. So we, in kind of summary, we have to unlock capital and access to loan relief, because if we don't do that, it's not going to help these businesses navigate some of this uncertainty.
Agreed. And Ginger, just to pick on you a little bit more, can you share your advice to these companies around receivables? I just loved what you brought up earlier on invoicing and so on.
Yeah, you know, it's funny. I hear so much talk about access to capital, and everyone's mind immediately goes to, well, I just have to borrow. And of course, borrowing is critically important. However, if you take a look at a small business, if we could just help them get their own money in quicker, and this might be through accepting digital payments, it might be through digital invoicing. 75% of small businesses are still using manual invoicing today. So if you think about Josephine the plumber, who comes to your house, she fixes your sink, then she goes back to her office, maybe a week or two later sends an invoice, and maybe a week or two later you pay Josephine. If we could actually get a digital invoicing solution in her hand, she could actually send the bill before she leaves your house. So this whole concept of digitization and getting your own money in quicker, and actually understanding with your payables too, to not pay your bills late, but make sure you pay them in a way that helps your overall cash flow.
Yeah, and I'll just say, for those of you who are doing supplier diversity contracting or so on, shortening your invoicing from 90 days to 60 and down to 30 is also just a huge, huge support of these business owners, particularly if you are working around anything physical, commodities, and so on. Ashraf, I want to turn over to what y'all are doing in this space. One of the things I think you're the most active bank I've ever worked with, even during COVID, but just being out in the community doing, and you know, your amazing partnerships with Techstars, with us, and then educating entrepreneurs on capital. I always thought y'all had your fingers in the community, which I love. Even outside the capital piece, but I'd love to hear what y'all are doing and what we can learn from your best practices.
Yeah, you know, and I'm besides, you know, spending a lot of time just general managing startup banking, I spend a lot of time on our DEI initiatives in the bank. And one of the things for me to do it is that I aspire to make it something that's sustainable. And that requires a real investment in the infrastructure. I don't think this is a silver bullet answer to how to solve historical problems that have been going on for hundreds of years. I believe in the laws of physics. Complicated and long duration problems require complicated and long duration answers. And
very true.
We have to put in the effort. And so the preface to that is that, and I think that means that we have to attack this problem from all of the vantage points. And that means if you're going to do this right, you first have to be able to onboard historically underrepresented innovators. You're also going to have to onboard and bank the historically underrepresented investors. You're also going to have to hire historically underrepresented staff to really represent the infrastructure from all the vantage points. And so Silicon Valley Bank's taking that approach as we're building the operating model, as we're improving and enhancing our operating model for a real go-to-market around that. Now, from a capital perspective, I think, look, you have to put your money where your mouth is. And our CEO, Greg Becker, went out and, we acquired Boston Private. We've got a big private bank. And he made a CRA commitment of multi-billion dollars over the next 5 years, of which $1 billion will be focused on small and medium-sized business lending. And so, that was a commitment he made. He was vocal about it. And so we're committed to doing that. And what we're doing to do that is we're actually expanding our presence to not just these historical tech innovation geographies like Silicon Valley and New York and Boston, but we're opening up a presence in Miami, actually in Miami today, in Miami, right. In Austin, in Washington, D.C., in Atlanta, in Chicago. And the reason we believe that is that we need to meet entrepreneurs in the environments that they're motivated by, that they're influenced by. I know as a Jersey kid, growing up in urban New Jersey, there's a pride I have in the community I grew up in. And what a wonderful thing to have these innovators remain in these areas that they're impassioned by. It actually helps their creativity. They're influenced by the physical space that they're in. And so we're opening up presence there, but we're also offering the opportunity to onboard. And so, to get the capital, you first need to actually be a client. And so that's part of the strategy of being in these geographies. And Techstars, as you mentioned, is another sort of virtualized partnership that we get to be enabled by as they're building their accelerator programs internationally and domestically across region. And so between that and having a charge card business and putting credit in the hands of practically most entrepreneurs that come through our doors are going to get that charge card. And then on top of that is then with the right emerging managers that back you, kind of coming to the table and providing seed lending to support that. So not just bringing them equity through the great relationships we're going to have with the emerging managers, but also having a seed lending business that allows them to get access to debt. And I think that's really important to start thinking about access to capital, pre-venture capital, because as I mentioned, a lot of the innovations now happening at the early stage, and we have to start meeting entrepreneurs where they are, and they're coming in early. There's a lot more. I'll pause there and I can obviously extrapolate because there's a lot we're doing on the capital side, and there's a lot we're doing on the partnership side, and there's a lot we're doing with family offices and digitization. But that's a starter.
I appreciate that. I'd like to think through thought leadership and mentorship just for a second. I know we're all very busy people, but your corporation's offering time and access to knowledge, I think is a huge help. I mean, I think the last I read, only 3% of new majority small business owners have a business degree. They have degrees in a million other things. I was in animal science. I studied cattle. That's helping me a lot in my startup. And so I wanted to talk through access to knowledge, skill set, mentorship. I mean, Ginger, talk to you a little bit of explain what Digital Doors is and why do it if you are a B2B versus B2B2C. Tell me more on why you created that program, what it is, and then how others could replicate with their own corporate skill sets.
Yeah, thanks, Elizabeth. It's a really important question. And literally when COVID hit, we're like, what can we do? I mean, and we knew that one of the biggest things that was happening is that these businesses were closing down. I mean, COVID caused at a minimum 45% of businesses to go out of business. And if you were a Black owned or female owned business, that number was, definitely higher. So what we wanted to do, and literally in 4 weeks, we created Digital Doors, which is a series of, number one, it starts with a digital diagnostic test, because we knew a lot of small businesses, they don't have chief financial officers, chief marketing officers. They don't, to your point, have the resources and knowledge. So we help them take a test, and then they get answers that are benchmarked against their peers. And it's things like about their strategy. Are they protected against cyber attacks? How do they manage their finances? And then we make recommendations of ways that they can improve it. And then we also, and through our partnership with you, we have a very strong digital curriculum component, because we know that small businesses do not have the answers and they don't have the wherewithal very often to do that. Then we partnered with companies like Shopify and Facebook, BigCommerce, in order to help develop the websites. And we also knew that if they were going to be online, they had to be able to accept payments. And so we partnered to really help from an acceptance perspective. So we think that, to your point, we're normally a B2B2C company, but we felt this was critically important to do to get it out there. Now we're actually partnering with cities, and this has been rolled out in Birmingham, St. Louis, and we have governments in cities that really want to work with us to enable their not only underserved, but served businesses today. And really, from my perspective, because e-commerce is not going away, consumers will not go back to shopping the way they did. It's critical that we enable them not only to be more digital, but to understand the impact if they're not.
Awesome. And on Ashraf, you already mentioned you personally do a lot of time, but also, I've just seen the amount of, both educational support, time, and mentorship y'all have given. What's your philosophy around that with startups?
Yeah, I think it has to be. So I agree with everything Ginger said. I'm just impressed with what she and the company are doing. So kudos to you. I think, I believe in a sort of two philosophies. One is that 100% digital doesn't work, 100% human doesn't work. I think that cyborg model. I'm not a perfect human, perfect robot person. I believe in that cyborg model. I think, and I just believe, all jokes aside, I think the omni-channel, omni-approach model is really important because it meets the human where they need you. And we're a very complicated species. Sometimes we're entrepreneurs. I remember being an entrepreneur and I didn't have time to be thinking about knowledge and acquiring knowledge. I was just busy coding until 2 a.m. when I could read something. And so At that point, I wasn't that I wanted to get on the phone. I wanted to get that through my phone or through my PC. But then there are other times where, I need knowledge now and I need to trust that knowledge. And as much as I trust, Mr. or Miss Google, I'm going to probably want to talk to a human being like a Ginger, like an Ashraf, like an Elizabeth that I can trust and feel comfortable that the answer is probably high fidelity based on an experience. So we've really set up an infrastructure where we try to meet that entrepreneur with the question that's being asked at the right time in the right way. And so we have relationship managers that we have on staff. So as you onboard, you're getting a relationship manager that you can reach out to and have that kind of that knowledge touch on the tactical stuff that you need answers to. But we also, as you know, Elizabeth, we publish information. We have a research team and we put together things like the state of the markets report so that you can get that sort of macroeconomic point of view. We also partner, as you mentioned, with the Techstars, and they do amazing knowledge work. We partnered with PitchBook historically over the past several years as well to put out reports as well. So I think it has to be omnichannel. We're going to start thinking about things like bringing those research pieces into our digital online banking platform as well. So that as somebody's sitting there thinking about their cash flow and seeing cool analytics, they could also get some knowledge information there. So I just think instead of this sort of monolithic answer to how to provide knowledge, it needs to be this omni-channel use case experience. And so that's how we're kind of trying to meet the entrepreneur.
And Elizabeth, if I could just add one thing, because I love what Ashraf said about kind of how to deliver that. And we just created something called the Strivers Mentor Collective. And we've taken our Mastercard ambassadors. So people like Arian Simone from the Fearless Fund, Dave Roberts, who's the Dodgers manager and a business owner, Morgan DeBaun from Blavity, Annika Sorenston. So we've taken these ambassadors and they're hosting digitally one-on-one Ask Me Anything virtual sessions. And we're really trying to create these kind of priceless connections and support. Imagine if you're a restaurateur and you get to talk to Marcus Samuelson, who's one of our ambassadors. So exactly to Ashraf's point, it's really about bringing those mentorship opportunities that because we're Mastercard, we can bring to the table, but how you deliver it is also important.
No, I appreciate that. I love the omni-channel focus. I think all of us right now are figuring out the balance of this digital world, but we like human connection. What is the new consumer behavior around that? So I do think it's important to test and iterate. I want to go over to this notion of fail rates or declines. And I think we could look at it, this notion that women and people of color are declined at such higher rates. And that is across venture, whether that is across credit, that's across loans. And we don't need to get into the why right now. What I'd like to get into is what both your organizations are doing very specifically around that for those who maybe they have the best business plan on the planet, everything is there, but maybe it's not the right connections, maybe it's not the right place, maybe it's being presented in a way that is not conducive to our current environment. Ashraf, I'll start with you on, I would say Hello Alice, the first time we raised and got probably 300 no's in our seed round versus a Series B where we were oversubscribed. It's a very different environment. I think a lot of that's learning and having new experiences, but what can organizations do to help people get to yes faster? Maybe is a way I'll ask that question.
Yeah. And so as an entrepreneur, how can you get to a yes faster? Is that sort of the...
Yeah. And how does your Silicon Valley Bank helping entrepreneurs learn that skill?
Yeah. You mentioned something around, look, I think there's the three key things I think that make it work, at least in the innovation economy. It's access to capital, it's access to knowledge, and it's access to networks. And I think what we're trying to enable within the bank is to actually get better about all three. How do we get access to capital, which we discussed, but then we also discussed access to information, the knowledge, and then it's access to networks. And I think those network connections are so important. I know, again, as a first generation American Egyptian, like I didn't come with this huge network. And then all of a sudden, I had this wonderful opportunity to, be the first in my high school to get into Harvard since 1964. And oh my gosh, I saw a world of network that I'd never, ever imagined existed. And, ever since then, I personally vowed to say that we need to replicate that. And because that's a competitive advantage, an unfair competitive advantage for some. Right. So how do we replicate that for all? I think that's a really important piece of what we're trying to do is matchmake and create these strategic introductions. And what I'd say for entrepreneurs is be aware that to succeed and get to yes quickly, those three things really have to be at the forefront of your MO, your objectives. Make that check every day and go, have I done my best to find that access to capital? Have I pushed hard to get access to information? Am I learning? And then how am I building connections and using and leveraging the resources around me to build access to networks? And when those three, I think, come together, you get to a yes faster. So philosophically, that would be my answer. There's a lot of tactics to that, but I'll pause on that and kind of say that's kind of the approach we're taking.
I appreciate that. And Ginger, as it relates to banking and credit declines and helping our community, I'd love to hear your thoughts.
Yeah, thanks. And, I agree with everything Ashraf said, but, look, clearly more than half of small businesses that apply for financing either get less or none of it. And particularly we see this in women-owned businesses where 70% are underserved. But if you really pull the covers back on this, it's because of data. It's either because small businesses don't have the data to understand and present their business. And it's also because those underwriting these loans don't have the data that gives them the correct picture of that particular business. So I think data is really key. And we're really happy to be able to leverage kind of our insights and data to help not only small businesses make better decisions and run their business, but also we partner with governments and banks to help small businesses get more money when they need it. So in a sense, data can really democratize access. So we have things like enabling access to open banking through our Finicity organization, which really provides not only small businesses with understanding their complete cash flow, but also banks to really look at non-traditional data. Things like our supply chain finance solutions that we help with banks. And also, we've got a microcredit program where we're actually taking underserved micro retailers, and this is around the world, to build credentials through this data and then provide better access. So I think, in summary, it's really around our data and our insights that can help both sides of the equation, if that makes sense.
It does. And let me ask you, because y'all both, and we do too, believe in data. I want to keep going on that for a minute. So companies sit on so much data, right? And I think people get afraid of data, but I think aggregate data and trends analysis is very powerful if people read it. And so for us, our target audiences are usually policymakers who can impact funding like the SBA, enterprise companies like y'all to see, what's really benefiting small business owners right now. And then also the entrepreneurs themselves. What we find is when they see what's going on in their own industry or with their own gender or so on, that it feels like a less isolating place. I'm curious, just Ashraf, where do you all ensure that data is getting to from your company? Who is it influencing?
Yeah. So how are we getting the data out? Communicating it?
Yeah.
Yeah. I mean, look, I think it goes hand in hand, frankly, with the knowledge exchange and the research. I come from a data background. I used to run our SMBs analytics. I still run actually at SMBs analytics team. In addition to our startup bank, I run analytics and sales operations. The dangerous part about just throwing data out is data can be misinterpreted. It can be misconstrued. It can tell very different stories if it doesn't have a narrative. So we usually, just in terms of lexicon, we believe in a three-prime process. You get the data and you got to get that right. Then you got to kind of convert it into information, but all the better if you can give it to somebody in bite-sized insights. And so we usually try to put out insights over just data to make sure that we're delivering it the right way, and then actually empower entrepreneurs with how to maybe use that data to their benefit. So here's an example. One of the things that you could typically say is like, okay, here's what, if we're going to go do benchmarking work, it's easy to just go put out a data that says, here's the median cash flow that an e-commerce company is going to have. And here's the, median revenue that an entrepreneur is going to have. But if you're not empowering that entrepreneur to say, well, take a step back. Right. I just gave you generalized mean and median. And by the way, you're SaaS, not hardware. Right. Different economic models. So you got to slice it.
Yeah.
Well, hold on. You're Silicon Valley and you're in Columbus, Ohio. Different economics, different investors. Venture capital, 90% of them don't work. So do you really want to compare yourself to the mean or the median? Because the median specifically, because that's actually the ones that are going to fail. You got to focus on the top quartile. So all of these are just examples of how I would encourage an entrepreneur to always see the data, but make a discerning decision to say, am I seeing data? Am I
Right.
seeing information or am I seeing an insight? And get to that second and third order to make sure how you're interpreting it is meeting the demands of your specific business model, and the geography you live in. That's one of the greatest mistakes, but also one of the greatest, I'd say, pieces of advice I'd give an entrepreneur.
Agreed. Ginger, do you have a follow-up on that before I jump to something else?
Yeah, no, just really quickly. One of the stats that just blew me away is when it comes to data, a lot of people feel that individuals and businesses don't want to share their data. But there's a stat that we just got, which is 74% of small businesses said they would share any of their data, financial and otherwise, if it meant that they could have greater access to credit. So I think first of all, we have to understand that people are willing to share data if it's done safely. And I think that's what we try to do is through our open banking vehicles like Finicity, we can be a center point to ensure that the data we get and that we provide is safe, it's right, it's approved. And that is really, to me, the key. If a small business can present, I think, Ashraf, you said this, if a small business can present themselves in a better light, and if a bank or other type of company which has access to capital, if they can then receive the data that's not always the traditional type, then you have a very strong win-win when you connect all this data and you can drive more capital into the system.
It's interesting because over 90% of our 700,000 small business owners have agreed to share their data in aggregate. We do not sell it for advocacy. So I agree with that completely. I want to start threading in more of my questions, but make sure that I appreciate those who are sending questions in the chat. And we're also, obviously, this is a video we send out for our corporate education series. So thank you all so much for watching. Andrea has a question. She's a business performance advisor. She's glad to be here and looking forward to continue these resources. But she was curious how much business costs directly correlates with cash flow and cost predictability. So I think that's really interesting because I know Digital Doors helps you think through cost predictability. Is that right, Ginger?
Yeah, I mean, we do ask financial questions of kind of where someone sits. And here's the scary part is I think it's a great question because costs to run the business, depending on what type of cost that is very much will impact cash flow. The problem is I personally have seen in my career that a lot of small businesses do not have a good handle on these costs. And right now, what we've seen, and we just completed another study, and the number one concern for small businesses even has overtaken access to capital, which is inflation. And I think that the cost that businesses have, it's getting harder and harder to control. You just think about a limo driver and the gas itself. So there's a huge correlation here. The problem is, and believe it or not, many small businesses are still using Excel. If they're not using accounting software platforms, if they don't have a way to track expenses and allow for that update to happen, those things can get out of control. It's a great question and it's critical.
Ashraf, anything to add on that?
I mean, Ginger knocked that one out of the ballpark. It's hard to follow that one. I think she's absolutely right. And I second the comment that Ginger made on inflation. I think it's real. And there are second and third order knock-on effects to it. It's also going to impact the employees. And if you're in high cost areas, rent's going up. And if the salaries aren't going up in a concomitant way, and by the way, now invested capital is shortening out, those things have those knock-on effects. And we are hearing more typical, in these sort of challenging cycles and in the troughs, you do wind up hearing a lot more of, the Warren Buffett, cash is king, be careful on your expenses side, on your cost side. And I do think Ginger's giving really sagacious advice, which is, at least use the available resources. You have to cost contain. So, use these SaaS platforms that are really good in terms of total cost of ownership for accounting relative to Excel that becomes a lot more problematic later. So find ways of what I would call scale your costs effectively versus winding up having some serious problems in total cost of ownership long term.
Yeah, and the two areas that are most important with cash is your own, right? To your point, Ginger, ensuring you know every single cost. You know, we did exercises during COVID where people were finding $5,000, $10,000 a month that they could cut, and it really didn't cut too much of their outcomes. And then, you know, getting cash from your customer. You know, customer is king on this, so ensuring that you're iterating, focusing on customers, listen to their new behavior because it's still changing weekly. I think that all of that is critically important. I have a question here via email on grants, and if your corporations put out grants. I know the answers to those, but I'll let you answer. Ginger, you want to go first?
Yeah, I mean, we work very, very hard to partner with organizations like Hello Alice, to partner with CDFIs. We do a lot of work with Axion and Grameen, really to be a partner in grants. We actually also work very closely with specific organizations that utilize these grants, like as I mentioned, the Fearless Fund. Another example is we are doing a big promotion with Major League Baseball, where we're working with 4 of the major league teams to provide $10,000 grants to different small businesses. So this is very much a part of what we do and part of the overall commitment that I mentioned up front. But here's what I would say to you. Grants are important, but grants without the education is in many times it can be a waste of money because people don't know how to use it. That's what I think is so amazing about Hello Alice, that you are providing that whole package with the money, the education. So I would tell people definitely go out for grants, but make sure that you've got the ecosystem surrounding you to be able to use it in the right way.
Yeah, Ginger, you make it very difficult to follow you. Your answers.
She's always been that way.
Your answers are impeccable, but I enjoy it because it makes mine shorter and people don't have to hear me talk. So, you know, +1 on that. And I think the only thing I'd offer, and yes, you know, we have similar programs and we have a Community Redevelopment Act department that specializes in a lot of this. The one thing I would add would be that also, as in terms of the be mindful and be careful comment that Ginger made, is grants oftentimes are non-recurring. Sometimes you're not necessarily going to get re-upped, and so you know, be mindful of how you're spending it, and also make sure you're not expecting it again. So you know, these are infusions. They're great infusions, but oftentimes, at least in technology, you know, you're trying to, we call them inside rounds, we call them follow-on rounds. And the reason why we say them are durable, limited partnerships that come in on the investment side, that level of sort of disciplined, recurring capital inflow become really important to an operating business.
Right.
And so I think it's important to almost segment your capital inflow into what feels recurring versus non-recurring, and proportionate according to your operating model. I think it's really, really important and relative to your roadmap. So kind of think about that as almost when you're thinking about capital, think about it as a portfolio. And it's not just about equity and debt, it's also about the durability and the continuity and the recurrence of that capital infusion.
Such a good point. And, you know, diversification, right? I think we all learned that lesson.
Yeah.
Last year is, yes, keeping your cash in bank, making sure you're diversifying it, applying for, you know, what is recurring. I think that's really important. I appreciate that a lot. Thematics for the year. I want to close out with a couple of things. I loved your silver, gold, bronze medal. I'm a huge Olympics fan, so I like that. But I want to just think through. Let's do it in 2 ways, and I'll start with you, Ashraf, so you don't have to follow Ginger. What is the thematic for enterprise that serve entrepreneurs? And then what is the thematic you see coming for the entrepreneurs themselves?
Around what areas, or just broad speaking?
Around cash. Cash is king, access to capital, and so on.
Yeah, I think the thematics for those serving, you know, the entrepreneurs, I think at the end of the day, I think that, like, number one, liquidity is still available, at least in the tech and life science space. And it goes back to, that's that gold, silver, bronze. And so I think all enterprises are still deeply encouraged to extend that capital. I mean, a year that's, slightly softer than another need not mean that the capital and liquidity isn't there. And so I think it's going to be more of the same generally in 2022 with some challenges, obviously, that we know macroeconomically in the way enterprises will deploy capital to entrepreneurs. And in my world, I think you're going to see that reallocation, that shift, like I said, from the late stage to the early stage, which bodes well for a lot of folks on this call. I also think that I would probably over allocate my comment this year to, you're going to also see it more geographically dispersed, not just in those core geographical areas like Silicon Valley, New York, and Boston, but in those other geographies. And I also think, let's not discount the fact that it's also happening internationally.
Right.
I mean, I saw a statistic, I don't have it top of mind right now, but a colleague of mine shared where there was an EMEA report that showed the amount of invested capital in EMEA. And I remember what it used to be, and now, oh my God, it's like larger than, like there were only 3 or 4 years in the United States that were larger than the year that EMEA has. So innovation and I think entrepreneurship is happening internationally. The stuff I'm seeing so thematically, I'm also seeing a geographical expansion of the extension of capital. And so and I'm really excited about it. You're seeing the stuff that's happening in the Middle East and North Africa. You're seeing what's happening in South Africa with fintech. You're seeing what's happening with fintech in Latin America, Brazil, Chile. So I love seeing that. And what I love seeing about that is then you're going to start seeing that entrepreneurship cross-pollinate. What's wonderful about America is we all came from somewhere, right? Majority, right? So we all sort of came and originated from somewhere. So that interaction between the local international capital and that domestic capital is going to really cross-pollinate over the next couple of years, which I'm really excited about. It's going to change the topography of what an entrepreneurial experience looks and feels like, even in the United States, which I'm really, really excited about. On the entrepreneur side, I think it's, again, builders build, entrepreneurs are entrepreneurs. And so I just think be open and to looking at these available sources of capital from grants. The PPP existed before, seed, debt, equity, kind of look at the whole purview and build a really good portfolio around you for it.
I wanted to jump in and shout hooray on getting out of these geographies, because where all these brand new businesses are being opened, built, and registered are not in the big 5 cities. And so I think it will very much behoove and be very profitable for folks to start really understanding how to get money, like you were saying, Ginger, in the hands of folks in Birmingham and Tulsa and Miami. That's where our business owners are. So that gets me excited and fired up. We're headquartered in Houston, which is now becoming a bigger market, but it's really been based on energy in the past. So, okay, Ginger, back to you on what is your outlook for the enterprise and then for the small business owner?
Well, again, now, Ashraf, you're a hard act to follow, so thanks for that. But I'm gonna be a bit provocative here and say I don't think they're different. What I'm going to talk about. Okay. So, number one, access to capital is going to be critical. But again, going back to what I said before, it's not just access to capital and enterprises making sure that they can support organizations like CDFIs, like Hello Alice, a lot of these organizations, but it's also supporting the ability for small businesses to operationalize and digitize their business so they can get their own money in quicker, they can manage their receivables and payables better. Now, with digitization, another major trend is safety and security. 50% of all cyber attacks are happening on small business today. It's 50%. It's a huge number. And as part of the ecosystem, enterprise organizations, as well as small businesses, have to take responsibility to make sure that they're protecting their virtual space, whether it be through cyber tools. There's a lot of great tools and things out there. We provide them as card benefits, but it's really important. So I think the safety and security. And then the other two things, and again, my research tells me that it's the same for both, is sustainability. We're seeing a huge focus by enterprises like, Mastercard with our Priceless Planet, but sustainability around the climate and the environment. A lot of small businesses are trying to see what their impact is on the environment through a lot of the carbon footprint tools. And then lastly is values. I think enterprises as well as small businesses want to do business with people that share their values. And in fact, we saw a stat of about 69% of small businesses want to do business with those types of organizations. So I would venture to say that I don't see a lot of difference between the things that enterprises are looking at as well as small businesses. And I would be, again, provocative to say that if there's a mismatch there, then we've got a problem.
Well, I think both of those are amazing areas to comment and close on. I hear a lot of optimism, which I love. We consistently hear optimism from our small business owners, but hearing it from a major network provider and a major bank gets me excited. I don't know if it's both your personalities, because you're optimists, I think, but the business side as well. So let me just share with everyone, thank you for those of you who are going to watch this video or who have tuned in today, for continuing to learn how to benefit small business owners and entrepreneurs who we fundamentally think are the fabric of this country. At Hello Alice, we are primarily here to serve new majority small business owners, but also ensure they are connected with the right enterprise partner for their access to capital and growth. So thank all of you. And I will hand it back to Danielle to close us out. Oh, we are muted, Danielle.
I'm so sorry.
There we go.
Thank you all for joining us and for being here today. We genuinely appreciate you and your continued support of our small business community. If we can help you in any way, feel free to reach out to us directly. Thank you all and have a beautiful day.
Thanks, everyone. Really appreciate you. Thank you, Ginger. Thank you, Ashraf.
Thanks, Elizabeth. Thanks, everyone.